Welcome to Crypto Insider, your trusted source for in-depth analysis and the latest updates from the world of digital assets. Here, we look beyond the headlines to uncover the real stories shaping the crypto landscape. Today, we're witnessing something unusual with Shiba Inu, one of the most talked about meme coins in the market. While SHIB's price appears stagnant and unremarkable on the surface, billions of tokens are quietly leaving exchanges in a steady stream. This isn't a hack or a glitch. It's a deliberate, large-scale transfer, orchestrated by entities who know exactly what they're doing. Our goal is to explore what these massive movements could mean for SHIB's future and the broader crypto market as a whole. Right now, market sentiment for SHIB is cautious, with prices trending sideways or even drifting downward, leaving many traders uncertain. Many investors are anxious, watching the price tick by tick, but the real story is hidden in the data, not just the price action. Over 131 billion SHIB tokens have been withdrawn from exchanges in recent days, a classic divergence between price and on-chain activity that often signals something brewing beneath the surface. Think of the price chart as a shop window. It shows what's happening now, but it doesn't reveal the long-term plans or the real action behind the scenes. On-chain data, on the other hand, is like peeking at the inventory logs. It reveals what major players and whales are actually doing with their holdings. Right now, the shop window looks quiet and uneventful, but behind the scenes, the inventory is being moved out in bulk, suggesting preparation for something big. This kind of activity suggests that someone, or perhaps several large holders, are preparing for a major shift or event in the SHIB ecosystem. The most important clues about an asset's future are often hidden in how it's being held and moved, not just in the price you see on the screen. At Crypto Insider, we're here to connect the dots, analyze the data, and help you understand the forces shaping SHIB's market and its potential trajectory. Let's dive into the evidence together and see what this silent exodus of tokens could really mean for the future of Shiba Inu. Remember, this is not financial advice. Always do your own research and make informed decisions before investing. When it comes to analyzing crypto, there are two main approaches that traders and investors rely on: price charts and on-chain data. Each method offers a unique perspective on the market, and understanding both can give you a serious edge. Most traders focus on technical analysis, studying price patterns, trading volumes, and historical trends to predict where the market might go next. This is the classic way to read the market's mood. For example, when SHIB's price trends down or moves sideways for days or weeks, many people assume that interest is fading and the asset is losing momentum. But there's a deeper layer that most overlook: on-chain analysis, which digs into the actual blockchain data itself. The blockchain acts as a public ledger, recording every transaction, every transfer, and every movement of tokens in real time for anyone to see. On-chain analysts track where tokens are moving, whether they're being sent onto exchanges to sell or withdrawn off exchanges to be held in private wallets for the long term. It's a bit like comparing a weather report to satellite imagery. The sky may look calm from the ground, but a storm could be brewing just out of sight. SHIB's price chart might signal weakness or stagnation, but on-chain data can sometimes tell a completely different story beneath the surface. For instance, massive amounts of SHIB are being withdrawn from exchanges and moved into private wallets, away from the public eye. This suggests that big players, or so-called whales, aren't preparing to sell. They're quietly accumulating more tokens, possibly in anticipation of future moves. Understanding on-chain data is crucial for spotting the moves of whales and long-term investors, those who can move the market with a single transaction. Daily price swings are often driven by news headlines and trader emotions, but token flows reveal the true conviction and intentions of major holders. When price and supply movement diverge, when the charts say one thing but the blockchain says another, it's a signal that something important is happening. Something significant is happening beneath the surface, often before it's reflected in the price. Our job as analysts and investors is to investigate what that might be, and to use every tool at our disposal to uncover the truth. So let's look even closer at the numbers and see what secrets the blockchain might reveal about SHIB's future. To decode SHIB's movements and understand what's really happening behind the scenes, we need to dive into the concept of exchange net flow, a crucial metric for any crypto investor. At its core, net flow measures the difference between the number of tokens moving into exchanges and those being withdrawn out to private wallets. When the net flow is positive, it means more tokens are entering exchanges than leaving. This is often seen as a bearish signal, since holders might be preparing to sell their assets, increasing the available supply for trading. On the other hand, a negative net flow means more tokens are being withdrawn from exchanges than deposited. This is generally considered bullish, as it suggests holders are moving their tokens to private wallets for safekeeping, reducing the amount available for immediate sale. When net flow is negative, it's a sign of strong conviction. Investors believe in the token's future value and are locking their assets away, often for the long term. This behavior reduces the liquid supply on exchanges, which can set the stage for a potential supply shock if demand suddenly rises and there aren't enough tokens available to meet it. That's exactly what's happening with SHIB right now. A sustained, significant negative net flow is being observed across major exchanges. Billions of SHIB tokens are being withdrawn, shrinking the pool available for trading and making it harder for new buyers to get in without pushing the price up. If demand increases, the price could move up quickly, as fewer tokens are available to satisfy buyers. Exchange net flow is a key metric for spotting these shifts in market sentiment and supply dynamics. So, understanding exchange net flow can give SHIB holders a valuable edge in anticipating price movements and making informed decisions. Recent on-chain data shows over 131 billion SHIB withdrawn from exchanges. This is a huge reduction in liquid supply and a loud signal of holder confidence. By moving tokens to private wallets, these investors are taking them off the market, reducing selling pressure. It's like collectors locking away rare comics, making them scarce and potentially more valuable. This accumulation is happening while the price is flat or declining, suggesting whales see SHIB as undervalued. They're building positions quietly, anticipating a future shift. Such moves often precede major market changes. The question is, what are these whales preparing for? The story deepens when we look at SHIB derivatives. As billions of SHIB leave exchanges, open interest in SHIB futures is spiking. Derivatives let traders bet on price without owning the asset. A surge in open interest means big money is positioning for volatility. This two-pronged strategy, accumulating tokens and leveraging derivatives, is classic smart money behavior. It's like a corporation quietly buying shares while also securing options for future gains. These moves suggest whales expect a significant price move. They're reducing supply and betting on a rally. The calm in SHIB's price may be the quiet before the storm. We've seen this pattern before with SHIB. In February, the price was flat, but on-chain data showed whales accumulating and exchange net flows turning negative. Derivatives activity also increased. After weeks of quiet accumulation, demand picked up. And with supply low, SHIB's price surged. This case shows how on-chain signals can precede explosive moves. While history doesn't repeat exactly, it offers valuable lessons. Divergence between price and accumulation can be a powerful indicator. The February rally was fueled by silent whale activity and shrinking exchange supply. Today's outflows echo that setup. Will history rhyme? The release of on-chain data has shifted SHIB community sentiment. Before, fear and doubt dominated as prices stagnated. Now news of whale accumulation is sparking cautious optimism, and even FOMO. The narrative is changing from SHIB is weak to whales are buying the dip. This shift can become self-fulfilling, as retail investors hold or buy more. On-chain data doesn't just reflect reality, it shapes it. The community is now focused on strategic implications, not just price dips. The conversation has evolved, and so has the outlook for SHIB. So, what does all this mean? Over 131 billion SHIB have left exchanges, and big money is betting on future moves. We've seen similar setups lead to explosive rallies before. While nothing is guaranteed, the parallels are striking. Whale accumulation and shrinking supply create conditions for a potential price squeeze. In crypto, price is often the last thing to move. The real story is in the data. Tracking on-chain flows gives us a window into market conviction. Is this the prelude to a new SHIB chapter, or just a portfolio shuffle? The data invites curiosity and deeper analysis. What do you think this silent exodus means for SHIB's future?